Hello and welcome to Wealth Manager, where we help make your money work for you. On the show today, we'll talk about Motilal Oswal's new realty fund and the rising trend of such funds entering the market. Fund manager Sharad Mittal will join in. We'll also talk about buying holiday homes with Avni Raja Singh and investing in Tier 2 cities with Ashutosh Limaye of JLL India. But before we begin, here's a quick wrap of what made news this week. Investors pumped in 1.35 lakh crores into mutual funds in October, taking the AUMs of the mutual fund industry to an all-time high of 13.24 lakh crores. That's according to data released by the Association of Mutual Funds of India, or AMFI. This rise in AUMs was the result of a strong inflow into both equity and debt funds. Liquid fund AUMs increased by a whopping 55%, crossing 2.7 lakh crores, while equity fund AUMs are close to the 4 lakh crore mark. Buyer sentiment towards real estate seems to be worsening. Property consultant Knight Frank has released the Real Estate Sentiment Index, which measures the sentiments of various stakeholders in the real estate market. The index has registered a drop for the fourth consecutive quarter from 71 in Q3 of 2014 to 59 of Q3 this year. As a result of delayed reforms, stakeholders believe that today's situation is worse than even what it was 6 months ago and are particularly pessimistic about the residential sector. The festive season too did not do much to revive buyer confidence. A new fund offering coming in exclusively for children. Axis Mutual Fund launches an open-ended balanced fund called Axis Children's Gift Fund. This fund will invest 40 to 60% in equities, while 25 to 55% will be invested in debt and money market instruments. Investments into this fund can only be made in the name of a minor. The applicant of the fund has the option of investing with or without a lock-in period. Motilal Oswal is all set to raise its third real estate fund with a target of 1,000 crores. Set up as a Category 2 AIF, the fund will invest in residential projects in the top 6 cities in India. To talk about this and about the trend of real estate funds in the market, I'm joined by Sharad Mittal, Director and Head of the Motilal Oswal Real Estate Fund. Thanks very much, Sharad, for joining me on the show. So before we get to the fund, I want to start by asking you your sense of the real estate market as it is today, because we have seen quite a tepid market as far as the sector goes in the last couple of years. Yeah, you are right. I would tend to agree that the real estate market is going through a consolidation phase. If I have to really break it into residential and commercial, two large sections of the real estate. Residential market has seen unprecedented price rise in the last 12 years. And the second round of price rise that we saw is between 2009 and 13. Right. I would say over a period of last 2.5 years, prices have been stagnant across the micro markets in India. We believe market is going through a consolidation phase. It would continue for next 2 to 4 years. This will be a period in which we believe there will be consolidation among developers. Okay. The mid to large size developers will become larger than what they currently are. And the developers will be forced to focus on end products, where the end user comes in, because the investors or the speculators who have played a large role in the price rise are kind of an absent and want to actually get away from the direct buying of real estate. Given these two things, to summarize it, I would say the market is moving away from appreciation margins to manufacturing margins. Right. The focus will be on affordable housing or middle income housing. In top 5 cities. Right. So on one hand, we have the market, which has been facing a lot of turbulence really in the last few years, as we were just talking about. On the other hand, there have been the slew of realty funds that have been hitting the market in the last year or so as well. Do you think that's largely because of the PE interest that we're seeing in the space as well? I think it'll be fair to say that the real estate fund, specifically domestic, has been fairly active since 2009. Post the election results and the measures that the government has been taking, there has been a fair bit of interest of the offshore capital coming back into India. Right. The capital requirements are large. There are certain regulations which don't allow banks and NBFCs to actively lend to developers before the approvals have come in. I believe there is a lot of scope for more capital to be raised and deployed.
there has been fair bit of activities in terms of regulations also from the government. Last one, the FDI regulations, which have been relaxed. I believe we would see more capital coming into India. Okay. The only difference is the capital which is coming, and private equity capital is considered to be smart capital, is able to segregate between a froth and the actual opportunity. So this time the money is going, if you typically see with mid to large developers and into cities and the asset classes where there is momentum expected to come.
Right. So what would you say are the challenges that you face in managing a real estate fund really in this kind of a market? I
think the key challenge is to get the strategy right. Real estate fund industry is a young industry. Unlike other financial industries like mutual fund, which now have a track record of almost 2 decades, real estate fund industry is less than a decade old. And between 2005 and 2008, when the first round of capital in terms of private equity came in, is gone through a challenging times. But I think the industry took learnings between 2009 and 13. I think getting the strategy right, what kind of partners, what stage of investments you want to come in, what kind of projects you want to do, and what kind of participation you want in asset management are some of the key things which will drive the results for fund managers.
Right. Okay, now tell us a little bit about this particular fund and how it is different from the earlier 2 real estate funds that you had launched.
So at Motilal Oswal, we have a private equity practice. Real estate is part of it. We collectively manage around 2,500 odd crores. Real estate, we manage little over 1,000 crores. We have come with a third fund. We don't do pure debt transactions from our fund. We classify ourselves as a mezzanine players, and our first fund was largely equity, which was small fund in nature of 200 crores. Our last fund was a 500 crore fund where we largely invested with large developers in 5 cities across the mezzanine opportunities. We'll continue with the same strategy. And we believe we have got a sweet spot. We have been able to identify opportunities which risk-adjusted return is high. And we'll continue with the same strategy in the third fund as well.
Right. So what are the kind of precautions that you take in order to, mitigate the risks as far as an investor's investments are concerned?
See, if you really look at from a perspective of an HNI investor, all our funds are domestic funds and money has been raised locally. From a perspective of HNI investing money into direct real estate or partnering with a developer in a lending transaction, a fund is far better placed to capture that opportunity. Right from the beginning of the transaction, choosing the right partner, right projects, putting in the right kind of diligence in place, whether it is legal, technical, and post-investment, monitoring those investments along with the developer. See, we need to understand the key difference, the way HNI or an investor on his own will do and a fund would do. Fund comes at a project level, would have access to the balance sheet and the P&L of the project, will have a lot of rights which will not be possible for individual investors to come about. So whether from a beginning to identify a project, a developer, doing precautions around the diligence and managing the project along with a developer and getting a successful exit is something which a fund manager and a fund house can do quite efficiently.
Right. So I think the IRR that is expected is around 25% for this fund. That's what's mentioned.
So these are target IRRs, and targeted IRR at the gross levels are between 23 to 25% on fund like this.
Right. But given the kind of, the way the sector really has been performing and how it's done in the past couple of years, would that not sort of impact returns of real estate funds? Because there have been cases where some funds have underperformed and, have had to seek an extension as well. What is your sense?
See, in all industries, you would have people with multiple strategies, and there will be times that some of them will underperform and some of them will perform better than the others. First thing first, there are good margins. Real estate business continues to be there. The challenge is on the velocity. At the current prices, there is sufficient margins for a real estate developers and fund to be made. The key is the execution and the sales.
Right.
I think the stage that we come in, which is mezzanine, which is early into the project life would be anything between 5 to 7 years, but we'll stay in a project for more like 2.5, 3 years.
Right.
So given that scenario, the average cost of capital for the developer will come down to more like 16-18%. I believe the opportunity for a high net worth individual actually is more potent to come through a fund route rather than making direct investments into real estate, where the outlook is to property prices will remain stagnant. He would be much better to participate through indirect way.
Right. So what's the kind of market you see for real estate funds particularly, and what's the kind of interest you've had in your fund as well?
It's just the beginning in our fund, and we believe we have a track record backing us, and this being our third fund, we see ourselves successfully raising this capital. As far as for real estate fund is concerned, I think industry is getting a maturity. There is a track record which is coming about. There is an experience which can be checked, and on the end of the developer as well, there is a fair bit of maturity coming in. This is a necessary capital in the part of their business, given the way the regulations are structured, given the scale of their businesses. Private equity is going to play an active role. I believe this industry is going to grow to strengths over a period of time.
Right. Right. As far as REITs are concerned, I mean, that is something that we could possibly see going forward. How would that really compare to real estate funds? What would the impact be of both these products in the market?
REITs is going to be something which will infuse a lot of liquidity back into the real estate. The assets which are locked into the developer's balance sheet will get listed. Both from a developer and investor perspective, investors would get one more asset class to invest in. There are some loose ends to be tied up on the tax part. Once that is done, I think this will be quite an interesting asset class for the industry as well as investors.
All right, we'll leave it there. Thanks very much.
Thank you very much. Thank you.
Time for a short break. We'll come back and tell you all about buying a holiday home. Stay tuned.